I'm George Ratiu, Manager of Economic Research with Realtor.com. With an eye toward the upcoming summer, the economy and real estate markets are moving toward a new normal. The Industrial Production Index advanced for the fourth straight month in April, outpacing market expectations. Output was higher across all sectors, with manufacturing, utilities, as well as mining, which includes oil and gas production, posting solid gains. Meanwhile, retail sales highlighted solid consumer spending in April, even with rising inflation. Americans spent more on cars, appliances, eating out, and at online stores. The big question is, can households continue to spend while their salaries are not keeping pace with prices and the Fed's monetary tightening is pushing borrowing costs higher? A sustained slowdown in consumer spending could push the economy into a recession. For now, consumers remain in a healthy financial position, fueled by a strong labor market. But some companies, worried about a slowdown, are moving to cut costs and jobs. New jobless claims rose to a 4-month high last week. On balance, the economy remains in good shape, but signs of a potential moderation are gathering on the horizon. The Conference Board's leading economic index, a measure of activity across 10 values, slowed in April, in part due to lower home building permits and a slide in consumer confidence. Speaking of building permits, construction of new homes also slowed last month, even as the cost of lumber declined. With rising mortgage rates cooling demand, homebuilder sentiment dropped to the lowest level in 2 years over worries about declining buyer traffic. Those concerns were echoed by the existing home sales data, which showed a third consecutive decline in April. With record high prices and mortgage rates above 5%, housing affordability is pushing many buyers on the sidelines. Mortgage rates did offer a slight reprieve this week, with the 30-year fixed rate sliding 5 basis points. However, the monthly mortgage payment for a medium-priced home is still about 50% higher than it was a year ago. The good news is that real estate markets are in the early stages of shifting toward more balance, even if it does not feel that way yet. On the downside, rent reached another high in April as companies moved to reopen offices and traffic in big cities returned to pre-pandemic norms. On the upside, Realtor.com's weekly data showed that more houses are coming to market, with more new listings boosting the supply pipeline above last year's levels. Another upside for consumers, Realtor.com released a brand new feature on our platform this week, adding a wildfire risk score to listed properties to complement the flood score that's been available for a while. The data are aimed to empower people to make more informed decisions when buying a home. Stay well this week, and we'll keep you informed with the latest numbers on our website and Twitter feed.